investors. Today we are looking at the Coca Cola company and PepsiCo. Wanted to do a evaluation of these two. They are the heavy hitters in the soft drink industry, and I think there's some interesting things to consider here. A lot of other industries are more defined. This is one that when I really got to doing some digging, it definitely surprised me in some ways. If you haven't seen it already, I did a video evaluating GM and Ford. I posted that yesterday. Of course, now I'm posting a second day in a row. Probably not sustainable. So just know that I probably won't be doing these every day. But if there's a certain comparison you want to see, or just a specific single stock you want to see evaluated or analyzed, make sure to comment that either on this video or any of the other videos so that I kind of get that feedback and I can cater to that on my content schedule. So, diving into Coca Cola and Pepsi, just another reminder as we start going through this, all of this information pretty much just pulled from Yahoo Finance. Um, Besides that, I did actually go in and read their 10Ks, their annual reports. Both of those were filed here earlier here in 2023. So, a lot of up to date information. Sometimes you run into that issue looking at annual reports when they're filed at the end of last year, middle of last year, and you're still waiting for this year's. And that can really kind of skew things because, especially when they're doing their risk analysis, you're not always getting the full picture because things change, the environment change, sales forecasts change. And so luckily, these two filed just earlier this year, I believe around the same time. And so uh, definitely a good spot to be in. So as we go down here, remember as we're looking at this, trying to do a fundamental analysis, looking at value investing metrics to decide if these are good stocks to buy. Um, Again, I'm not going to give you a specific recommendation. Obviously, I'll lean one way more than the other, but this is not investment advice. You got to make those decisions yourself. I just wanted to share the comparison, share the information, and hopefully you can make informed decisions as you pull information from other sources to help you out make your decisions. So both of them are trading a little differently. So $60 a share for Coca Cola, $181 a share for Pepsi. I like to look at the ISS audit board, shareholder right and compensation scores. The higher the number, the worse they are as far as those rankings. And these are governance scores. So just looking at how the company is being run from mostly an ethical and integrity standpoint. I prefer to invest in companies that I can trust because then the information that's being provided through annual reports, quarterly reports, various filings, I can trust the information that the company's actually giving. So both of them ran right in that same area, up there, eights and sevens, 4, 3, and another seven. Coca Cola, I think, has comes away looking a little better here on just these numbers. I put a note here. We can look at that. So the audit score on Pepsi, I believe they were about the same. Let me look here. 8 and a 7. The auditors didn't make a whole lot of comments in the Coca-Cola annual report. I was surprised by that. They didn't highlight anything. They basically just described their process for evaluating it and then just signed off on it. Whereas in Pepsi, they did, they made a note of these things here. Had to do with the sales incentives accruals, the carrying value of acquired franchise rights and the SodaStream brand, and then some unrecognized tax benefits. You can go and dig into that and read that for yourself, kind of decide how you feel about those statements. But definitely some things to consider when we're looking at these companies is, you know, they have to be audited every year. And those auditors will tell you what's going on in the company. As far as looking at some of these basic ratios, our forward PE, Coke is running pretty high compared to Pepsi, running at a 4.88 and a 5.1 on its trailing. Coca Cola tends to trade a little higher. People put a lot of value into Coke, even well above their earnings. And something we're going to see as we're going through this is a lot of it has to do with just the strength of their brand, their trademarking. Um, Truth is I personally, I'm not addicted, but I love Coke Zero. I buy that stuff constantly. Everywhere I look, I'm seeing people drink Coke Zero. I live in a rural area down kind of in a southern state, so maybe that's part of it. Tend to be a lot of unhealthy people here, but no, Coke Zero is something I love, and so I mean I think people place a lot of value on that branding, um, and a pretty focused company, so their PE is going to be a little higher. But I do like that Pepsi looks like it's trading at more of a discount. Really, if you're less than 10 on PE, depending on where the industry typically ranks, I'd say below 10 is usually a good sign of some value and it's worth investigating. On the PEG ratio, Coke's really high at 3.31. I like to see this well below zero. 1.34 for Pepsi's not terrible. It's not bad. But again, I'd like to see less than one because that means that their price to earnings is, um, undervalued compared to how they're expected to grow. And, that's the problem with looking forward. Past history is not indicative of future performance. And so, it's a struggle, right? Because we as investors, especially value investors, have to take future predictions with a grain of salt. We don't know what's going to happen in 6 months or a year. We have our best guess, but, if we've seen anything in the last 4 or 5 years, is things change and they change quickly. Price per book, 10.42 times versus 0.66. So again, Pepsi trading at a discount to its book value, that tangible book value. Something we'll see is I'm interested in some of the intangible assets that Pepsi keeps on the books. And I'm not sure on this price per book if they're calculating that to tangible assets. Typically they do. But if you're going to actually run the numbers for this, definitely pull out goodwill, pull out intangible assets, and see physically what's actually sitting on that balance sheet. So the book value per share for Coke is 583. So right about 10% of their share price, and then 49.91 for Pepsi. Price per sales, this is another thing I like to look at. Um, if the price isn't indicative of what your actual sales volumes is, that's usually not a good sign. Coke is trading at six times its sales, whereas Pepsi's trading at 0.3. So just looking at some of these boilerplate ratios, Pepsi's definitely coming out ahead. And as we'll see, I think part of that has to do with the nature of the company. We look at Pepsi and Coke and we assume that they're the same. They're just big, heavyweight beverage companies. But that's not really the full story. And we're going to dive into that as we keep going forward. Now, looking at some of these percentages on profit margin, operating margin, and then return on assets and equity. These I like to look at because it tells me how the company's being managed. Are they doing a good job of making sure that they're getting money back on what's actually in the company? Coke's coming out of here ahead by considerable numbers, I feel like, specifically on their margin, 22.6, 28.1 compared to 7 and 13. Definitely operating at a higher margin, which is, for an investor, that's safety. That's your safety blanket is the margin the company operates at. So Coke kind of pulls ahead here a little bit, running around the same on their returns on their assets and equity. So that's comforting to see. I believe on GM and Ford, we weren't seeing solid double digits on these returns. Whereas here on return on equity, both of these companies running around 35 plus percent. Now, as far as the analyst predictions, and of course, like I said, these analysts are just what Yahoo Finance posts. It said there's 17 analysts. It doesn't always specify who it is. So these kind of have to be taken with a grain of salt. We can at least look at the past 5 years, and both of them running in 5 to 6% growth in the last 5 years. The next five looking about the same for Coke, and then jumping up almost to 8% for Pepsi. Again, got to take that with a grain of salt. Do we really know how well it's going to perform? We don't. There's all sorts of risk factors these companies have to take into account. Both companies listed very similar things. Obviously, obesity being one of the high ones, with litigation around that, possible taxes. Um, I don't. I need to look into it. I can't remember. I believe it was New York City was looking at a sugar tax on sodas. I don't think it passed, but definitely correct me if I'm wrong. Um, and then jumping down here into cash flow, free cash flow is super important numbers when you're looking at a company. Both have solid, healthy, positive free cash flow. Levered free cash flow, Coke's, almost actually right around double what Pepsi has. And that levered free cash flow, I mentioned it last time, that has to do with its cash flow to meet its debt obligations. So both of them in a healthy position to be able to pay down their financing and those kinds of things the company has to deal with. Now looking at just a couple more ratios, your current ratio, that's your current assets to current liabilities. So liquidity ratios, 1.15 and 0.87. Neither of these are strong numbers for either company. At least Coke is, more than one. That's $1.15 in current assets to every dollar in current liabilities. So at least, if they had to, they could pay it all down today. Pepsi would come up a little short. They'd have to finance to be able to meet those current liabilities. So that's going to take some maneuvering. Really, you want to see well over two, 2.5, really, on your current ratio. On the quick ratio, that's the same as your current ratio, except we're going to take out inventory out of the current assets. It's also known as the acid test. Again, just a solvency ratio. 0.93 for Coke, 0.68 for Pepsi. So again, Coke pulls ahead here kind of significantly there on that quick ratio. Debt to equity, 163 versus 243 on Pepsi. Really don't like these numbers. Want to see well under 100. But that's the nature of the game right now, especially with rising interest rates. It's going to be a bit of a challenge for financing for these big companies, and it's going to be interesting to see how they navigate the current macroeconomic landscape. As far as dividends go, both of these are dividend stocks. I know a lot of investors like these companies. Coke definitely is a lower amount per share that you're going to get. Part of that's because it's a cheaper stock as far as just share price per share, but percentage wise, it does come in a little higher than Pepsi does. So on our trailing dividend amount, $1.78 a share per year versus 4.6. Slight jump for both companies. 14% for Coke, and 28% is expected for Pepsi, an increase in dividends. So Pepsi's a little more bang for the buck, but again, these future dividend rates and amounts, those are what's expected. And so that could definitely change as the company gets to the point that it's ready to announce these changes. I like to look at insider ownership percentages. I want to see a good amount of that stock owned by people inside of the company because that tells me that they have a strong belief in the company. You would be surprised at how many companies, when you're looking at Yahoo Finance at the percentage of insider ownership, how many companies have zero. A ton of companies are just owned by institutions, institutional investors, and those kinds of things. And so it's refreshing when you can see a large percentage of money that's coming from within the company itself. So 0.67, 0.15. Obviously, that 0.67 is significant. I know it sounds small because these are less than 1% of the total shares. But with two big stocks like this, where they're trading in those large indexes, the fact that that high of a percentage of people inside the company own it is refreshing. As far as market share, now something I'm going to get into here in the next couple minutes is uh, the markets that these companies operate are not as defined as, again, we analyzed GM and Ford last video, and the automotive industry is very defined. I mean, you sell cars, you sell vehicles, you sell automobiles. Um, there's not a lot of flexibility there. I mean, you have different segments. You've got EVs, you've got hybrids, you've got gas powered, you've got trucks and SUVs and cars and compact, all of that kind of stuff. You've got autonomous vehicles. So starting to have more differentiation in the types of companies in that industry, but really on these consumer goods, um, you're not you're not getting as clear defined boundaries on who is competing with who. And we're going to see that here in a minute. You can kind of already see that down in the competitors listing. So what I did instead is I wanted to look at the revenue amounts for the North American and international markets to kind of compare these two companies. As far as the North American markets, Coke reported fifteen billion dollars in revenue, whereas in North America, Pepsi made $55 billion, but only 26 billion of that was their um, beverage unit. The way the companies are set up is different. And so wanted to be able to compare that on international markets, 27.5 billion for Coke, and Pepsi made 33.7 billion, and again, that's all total. So that's beyond just their beverage unit, whereas Coke is pretty much solely beverages at this point. So in my noteworthy section, these are just things that I found interesting. The first one, I've kind of been hinting at this. These companies are similar but not the same. And part of that is Coke is pretty much a beverage company through and through. That's what they do. Did not mean to rhyme there, of course, but 69% of their offerings is soft drinks. They do water, sports drinks, coffee, tea, juice, enhanced dairy, I think is what they called it, and or value added dairy, and then plant-based beverages. So they've got a diversity in the beverages they're offering, and part of that is consumer sentiment shifting from soft drinks. They've really tried to expand into those different beverage markets. Pepsi, on the other hand, owns their soft drink beverages, but they also own Frito-Lay, which is a large consumer food unit, Quaker Foods, and then they have some convenient food businesses that mostly operate overseas. And so we'll see that, Pepsi's not just a beverage company. And so I think what a lot of people do when they're looking at these two companies is they look at how many restaurants offer Coke and how many restaurants offer Pepsi. They look at who's drinking Pepsi, who's drinking Coke. People by and large, and maybe this is just my opinion, but people by and large prefer Coke when it comes to beverages. But, if we're looking at chips, Coke does not offer chips. I love Lay's potato chips. I love the different flavors they offer. I love Cheetos, and if I'm going to go buy a bag of chips, I'm going for Frito-Lay. You got your Quaker Foods offerings, a staple in a lot of people's diets. So Pepsi's a little more diversified, I think, as some of these market risks around consumer sentiment on some of these different alternative ingredients, alternative sweeteners and stuff. I can't make it through a day online without seeing something about some new additive or something that they're looking at some study on. And People are just really wary of that stuff right now. And so I think Pepsi's got a little bit of an edge there to be able to kind of avoid that because they've got such a wide product offering. I was looking at kind of what are these companies' mission statements? What's the positive aspect of what they are trying to create? Coke's, they had 3 bullet points in their annual report: loved brands, done sustainably for a better shared future. Loved brands is pretty tangible. Again, their trademarks is what's probably most valuable to them. Done sustainably, obviously trying to make some efforts to they have a large bottling segment. Pepsi doesn't really mention that, so I'm not sure how much they do on that side. Coke, a big part of their business is bottling. They recently did a big partnership with Monster. I think they own 16% of Monster now. And so, there's some raw goods and stuff that goes into that manufacturing process. So, some sustainability needed for that, for a better shared future. That one's really vague to me, not really tangible, but just trying to say, we want to be a positive company and well liked. Uh, Pepsi, on the other hand, I felt like all three were kind of more tangible values. So positive agriculture, they were able to highlight the type of regenerative agriculture that they're helping to create. They have a partnership right now with Archer Midlands, another big company in the consumer industry, and big partnership there to do regenerative agriculture. So we're able to put some numbers to it. High emphasis on positive value chain, really trying to strengthen those relationships with their vendors, and expanding their the value they're providing through that. And then in positive choices, again, trying to diversify and differentiate their products so that people have a better sentiment towards them. I thought it was interesting, but almost a little humorous that Coke mentioned 2.2 billion servings per day when they were talking about the beverages that they sell worldwide. Um, I, I don't know how you measure that or quantify that. I mean, number of bottles of whatever sold. Um, but it was 2.2 billion servings consumed per day. So it's a little strange because if you bought a bottle of soda, it doesn't necessarily mean you drank it that day. But I'm don't want to get off on a tangent there. And the other noteworthy thing, and this was kind of mentioned in audit up at the top, is the intangible assets listed on the books for both of these companies. Coke's was a little more simple. They had trademarks. I think they had their supply chain or vendor chain kind of listed on there. Whereas Pepsi had customer relationships, acquired franchise rights, and their brands. And so the acquired franchise rights or reacquired franchise rights was something the auditors were seemed a little skeptical of. It's odd to quantify that and put numbers to it. Um, so in my opinion, a lot of those kinds of things are better left unadded. As far as competitors in the industry, like I said, these are kind of two different companies. They do share some competitors. So like Keurig, Dr. Pepper, KDP, that's probably the third biggest company in their wheelhouse. Um, you also have to deal with Nestle, and Celsius is an up and coming, Red Bull being a private company, Monster. I have PG, but I don't know why I have that listed. On Coke side, because they're solely beverage, you got to deal with Starbucks. You have to deal with ABEV, Anheuser-Busch, and those kinds of companies that specify that are just beverage companies, even though they're more alcohol related. And then this other Chinese liquor company, Mutai, is like the Chinese alcoholic beverage. It's served everywhere. And so that's a big challenge for Coke as they're investing billions of dollars into the Chinese market to control that market share. And then other ones that they list in their annual report: Danone, Suntory, Unilever, Kirin, Holdings, Heineken, Diageo. Forgive me if I pronounce those wrong. And so some of those have crossover to Pepsi, But Pepsi also lists in their annual report, they're talking about Campbell, ConAgra, Hormel, Kellogg, Kraft Heinz, Mondelez, Utz. Again, just different types and structured companies and product offerings. So their competitors are going to be different. So as you're analyzing these companies, you're not analyzing them against the same people, even though you're analyzing them against each other. Something I wanted to point out in this video is a kind of a cool feature. If you I don't know if it's just Google Chrome, but it's definitely Google search. If you go in and you search a company's stock ticker or search like KO stock, um, it'll pull up a little chart for you. And in the top, right above the chart, there's three buttons. You have overview, compare, and I don't remember what the last one is, financials. And if you click that middle one, compare, and you can do this on uh, ETFs and things like that as well. But it's useful with stocks because you can hit compare and then compare it against anything else. So like obviously we're doing this, we're going to compare Coke and Pepsi. I thought it was pretty interesting how closely they trade alongside each other. I think that's why they're compared against each other so often. It is interesting that they trade so closely when they do have such differentiated businesses. I also wanted to look at how they compare to the S&P 500 and seriously kind of surprised by this. So on both of these, the blue line is the company we're looking at. The red line is S&P 500. Both of them have well outpaced since about 1988, the S&P 500. It has 5,500% increase compared to 2432 and 9,200% increase compared to 2432. So kind of crazy numbers there on the growth that one would have on these stocks. I'd be interested to see what year Warren Buffett started investing in Coke. I know that he's kind of a reason their stock is so popular. I don't know if they would be as well revered and loved if Warren Buffett didn't have a can of Coke in his hand at every single shareholder meeting. Maybe that's speculation, but I think there's something there. This last image was just something I found interesting. This is from Business Insider. Just different restaurant chains that carry Coke versus Pepsi. So obviously Coca Cola is kind of winning out on the number of well-known chains. If we're doing analysis of these different companies, Domino's versus Papa John's and Pizza Hut, um, Arby's and Sonic, McDonald's, Burger King, KFC, um, Whataburger, In-N-Out, Applebee's and Chili's. Obviously people kind of have their preferences. I think personally, I think most people lean to that left side around what Coke offers, but also, those Yum brands, KFC, and others tend to be around that Pepsi side. So I am definitely interested to see what your perspective on this comparison is. Who would you pick? Who would you invest in, Coke or Pepsi? I think I have a little bit invested in each of these. Of course, if you own an ETF, an S&P 500 index or something like that, you've got money invested in both of these companies. So you can't really avoid it. So I don't feel too bad talking about the companies as if it's investment advice. But again, I'm not a financial advisor. I don't have any of those important certifications to be able to give advice. But I want to know what you think. I'd love to see your comments down below. Just a little plug. I have two books that are published. One is called From Enron to Elon. It covers mostly publicly traded companies and people and ideas and competitive advantage and how those have shaped the rise and falls of these big companies. But more specifically, since we're talking about Pepsi, I have a book that I published called Trusted Leaders, Successful Businesses. And that one does have a case study on Indra Nooyi, which, forgive me if I pronounced it wrong. She was the CEO of Pepsi for a considerable amount of time. She's the reason the company is in the shape that it is has the direction that it has. And so, I mean, if you're interested in learning a little bit more about her, I would certainly be enthusiastic if you wanted to pick a copy of that up. And that's available on my channel page. There's a link for my author page. But regardless, I appreciate you stopping in, viewing this. I would love it if you liked and subscribed, especially leave those comments. And I look forward to seeing you guys at the next video. Again, I don't know when that'll be, if that'll be tomorrow or next week. But I'm definitely going to keep kicking videos out to you guys. I want to make sure that I'm providing strong value for you. So again, if there's something you want to see, if there's questions you have, just let me know and I'll get those addressed. Y'all have a great day, and I will see you next time.